So if you just extrapolate that chart, you get to 1 billion users by the end of 2025 and 4 billion by the end of 2030. Okay, that's half the world. Okay, so what does that mean? Well, you can also take the log chart of Bitcoin and just extrapolate out into the future, and you can see the trend rate of growth, the exponential trend over time. So it gets to somewhere like $1 million, and what happens is the space goes from 2.5 trillion, where it is today, to, let's say at the end of this cycle, 10 trillion, maybe 12, maybe 15, depending what the cycle's like.
RealVision's founder and CEO, Raoul is well known for his incredibly optimistic long-term price predictions for both Bitcoin and the larger cryptocurrency industry. Pal believes that over the next 6 years, the most valuable cryptocurrency in the world will hit at least $1 million per coin, pushing the total value of the crypto market to an astounding $1 trillion. The Bitcoin market has established itself as a disruptive force with unrivaled potential, despite its relatively young existence. Cryptocurrency investors frequently get returns of 10% to 20% every year, whilst traditional bond and stock investors are lucky to see comparable profits in a matter of minutes. Pal goes into further detail about these audacious predictions and other topics in a recent interview with SquiggleDAO. Please take a time to like this video, subscribe to the channel, and hit the notifications bell. Now, without any more delay, let's hear what Raoul has to say.
Firstly, decide what your time horizon is. It's the single most important thing. Most people, I can see it already scared of the down cycle to come because they've all got PTSD of the last one. But if you want to go to the OGs of this space, the Dan Moorheads, the Wences Caceres, all of these guys, they didn't give. They just rode it and added into the down cycles, and they've compounded massive wealth. And there's many people who are not public who've done the same. But most people fear the downside more than thinking of it as an opportunity. Even though it never feels great, I was excited about it in 2022 because it meant I could add to my positions at great levels and compound. So then you get back to an all-time high much sooner than everybody else who's just done nothing. So that's really interesting. And so time horizon is super important. If you just don't want to deal with the downside because your psychology doesn't allow you to do it, that's fine. You need to really think that thing through. Now, what happens is people lose their minds in a bull market and in a bear market. In a bear market, they get rid of all their tokens. They say, never again, this is the worst thing I've ever done. And in a bull market, they end up buying too much shit, stupid shit. And really, to not up the movement from 2.5 trillion to 10 trillion to 100 trillion is to own the highest quality assets and do nothing. Now, we all have an inner degen somewhere within us. So allow yourself a bit of space to do that. You know, I've got positions in dog whiff, hat and bonk and, you know, you name it. But when I look back in my portfolio, it's probably 1%. But I look at it on the screen all day. I'm checking the whiff price all day. It's ridiculous. It's 1% because the rest is just a buy and hold long-term position. And then I see a lot of people trying to be overly cute by saying, oh, I'm going to own this underappreciated crypto like Cardano or XRP or whatever. Fine. But you're taking a risk that they're not going to appreciate the same as the proven assets. Now, the proven assets keep trending. If I look at the compound rate of growth, the annualized rate of growth, Bitcoin's 150%, ETH since 2012, ETH is 180, about 160, 70%, something like that, since 2015, 16. And that's per year. I mean, this is bananas returns. And then Solana's like 200. And that was a snapshot in February before. I mean, many of these aren't at all-time highs yet. So the returns from just owning the top assets is so good. Now, I also understand that a lot of people may only have 10 grand worth of savings. So they think, well, you know, even if Bitcoin goes to 1 million, that's a 14x. So I've got 140 grand. Can that even get me a deposit on a house? Is that a retirement saving? I get it. So people really want to take more risk, but just do it intelligently. And that's how not to this up. Because if you turn your 10 grand into zero and you do it every crypto cycle, which many people did, the NFT cycle destroyed a lot of people, and a lot of people got destroyed in just all of the kind of super early stage speculative stuff. We've all got wallets of shame, so it's not like any of us are any better. We all have the wallet of shame. And don't use leverage is the other one. That's the other thing that people tend to do is they love getting a yield. I don't see the point. See, yields have risk. They come with a risk. Even staking yields, it often means if you're not liquid staking, you've locked it up. If it's liquid staking, there's the risk of the platform, of Lido or whoever else going under, or something happening, right? Something unexpected. And in crypto, something unexpected always happens. Having leverage on a 70% volatility asset class is a very, very dangerous thing. Most likely, you will lose control of your coins. Your one job is not to lose control of your coins. That's why storage is super important. Your one job is not let go of your coins. Keep it for that 5 or 10 year bet, and your future self will thank you forever for doing it.
Raoul Pal has a simple formula for making the most of the prospects in the cryptocurrency space. Stay away from leverage, play the long game, and make sure that a bigger percentage of your portfolio is made up of safer assets than major cryptocurrencies like Bitcoin, Ethereum, and Solana. Former Goldman Sachs executive Pal stresses the need to stay away from leverage, warning that doing so is a surefire way to lose out on what he views as the best investing opportunity ever. In his view, technology is about to undergo a revolution that will completely change the financial industry. Pal says we have 6 years left to take advantage of these amazing prospects before the world is entirely transformed. He goes on to say that while others find it difficult to stay up, those who take advantage of this now will be able to rest with substantial benefits. Let's now explore some further takeaways from the interview.
I bought Bitcoin at 200 in 2013. It went up to 1,000, then it collapsed 87%. But I had a long-term time horizon. I'm like, fine, it's an option, whatever. I didn't put a huge position on, but it was decent enough, and I just didn't look at it for a while. I followed it, but I didn't worry about the P&L because it's like, the bet goes on over time. It's an option. And eventually I sold out mistakenly in 2017 when things were starting to get crazy. I was up 10, 12x and it was 2,500. They had the Bitcoin forking wars. I didn't really understand what was going on. And I wanted to be clever, overly clever. So I took profits. I thought, I am clearly George Soros. I've just made a 10x and, wonderful. It went up another 10x in the next 6 months. I mean, people don't remember 2017. They're still scarred by the last cycle, but 2017 was wild what happened at the end of that cycle. So, it went from 2,000 to 20,000, then fell 85% again. And I didn't get back in until that sell-off after COVID. That was my signal, and I got back in. Traded well, bought the down 50% period, everything else in it, locked and loaded, massively got a much bigger position than I did the first time around, and have been in ever since. I went back, and I should never have done this. I went back and said, I wonder if I just kept my original position and did nothing. I'd have done 5 times better. And then I thought, okay, what happens if I did what I was supposed to do, which was, let's say, double that original bet that wasn't so big that you couldn't do that. Just double that, just add that same amount in within 40% of the low. So you're giving yourself tons. I'm not saying, you're going to catch the low, but you got 40% wiggle room to somewhere get around the low. So that's dollar cost averaging around in a bear market. I'd have done 25 times better because that's compounding. And that was a stark lesson to me. My working thesis now is you've seen me post in the past charts of the adoption of crypto. So we use active wallets. Now, we know they're double counted, but we're comparing it to the internet, which was IP addresses, which are also double counted. So it's fine, right? It gives you the rough rule of thumb. There's about 520 or 550 million wallets, active wallets out there. It's growing at twice the speed of the internet. So this is the fastest adoption of any asset class or technology the world has ever seen. Technology side's just been beaten by AI, just because Microsoft and other things can install it everywhere instantly. But it's massive because it is an asset and AI is not an asset. So if you just extrapolate that chart, you get to 1 billion users by the end of 2025 and 4 billion by the end of 2030. Okay, that's half the world. Okay, so what does that mean? Well, you can also take the log chart of Bitcoin and just extrapolate out into the future, and you can see the trend rate of growth, the exponential trend over time. So it gets to somewhere like $1 million, and what happens is the space goes from 2.5 trillion, where it is today, to, let's say at the end of this cycle, 10 trillion, maybe 12, maybe 15, depending what the cycle's like, and then on to 100 trillion, which is the size of most of the other asset classes like equities. In fact, most of them are larger than that. So that movement from 2.5 trillion to 10 trillion to 100 trillion is the trade. And that also happens to be the fastest, largest accumulation of wealth the world has ever seen. Nobody's ever seen anything like this before. It's an equivalence to the entire baby boom generation entering into financialization, buying stocks and stuff like that, plus the opening of China to the WTO, plus the Iron Curtain coming down in Russia. It's of that magnitude of wealth generation in one short period.
Insights and personal experience with Bitcoin and the cryptocurrency industry are shared by Raoul Pal. When he purchased Bitcoin in 2013, it was just $200. He saw it rise to $1,000 and then drop by 87%. In spite of this, he continued to see the big picture and considered his investment a long-term choice. After making an important profit in 2017, he sold, believing he had made the most of it. However, Bitcoin kept rising, demonstrating the volatility and unpredictability of the market. Pal highlights the value of continuing to invest and the possibility of achieving enormous returns through dollar cost averaging, particularly in times of market turbulence. He draws attention to the cryptocurrency market's extraordinary rise, pointing out that its adoption rate is higher than that of the internet. According to his projections, there may be 1 billion cryptocurrency wallets in use by 2025 and up to 4 billion by 2030. Because of its quick uptake and Bitcoin's exponential growth, the cryptocurrency industry might surpass $100 trillion in value, offering an unmatched chance to make a fortune. The revolutionary potential of the cryptocurrency market and the significance of a long-term investing plan are clarified by Raoul Pal's observations. In order to receive updates on additional in-depth opinions and analysis from experts, please give this video a thumbs up, subscribe to our channel, and hit post notifications. Until next time, happy investing.